the larger deals, we've actually had built relationships with other syndicators that have been doing this for like years and years. We felt that was the, I guess, least risky way to go about it for our investors, because we didn't want to just go out and do like some gigantic deal and be like, yeah, well, we've never done this before, but why don't you just put all your money in here? So, partnering with experience is something that we like.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why? Hi everyone, I'm Jason Ballara, and this is the Know Your Why podcast. Today I'm here with Alex Kingman. Alex is the Director of Investor Relations at KGI Capital. Her company helps high income and high net worth individuals invest passively in apartment buildings. Alex, I'm going to stop there because I want you to tell your story. But first, I just want to say thank you. Thank you for coming on the show today and taking the time out.
Yeah, thank you for having me on the show. I'm excited to be here, and I love the whole concept of the Know Your Why. That's a lot of the reason behind our business and what we do as well. So I'm excited to be here.
Awesome. Well, let's just start with your background. Tell people your background, what got you started in real estate, kind of a little bit of your story, and then we'll just go from there.
Sure. So we actually got started in real estate, my partner and I, about 6 years ago. We started out a lot smaller than multifamily real estate. We started out doing a house hack, actually. So it was a 3-bed, 2-bath, and there was a little granny unit in the back. It was connected to the house, but a separate entrance, and it was also connected to the garage. So we rented out the main house, the 3-bed, 2-bath. We lived in the granny unit, which was a studio. And there were 3 of us at the time. Now there's 4 of us in our family, but at the time there were 3, but it was still like a small 300 square foot space that we converted between the studio and the garage. We converted into a 2-bed, 1-bath. So that was our start, and we realized how much we liked it. We did like all the work ourselves on that one because my partner is in the construction industry, and more on that, in a minute. So from there, we were like, we love it, but we don't love California for investing. So we went out of state, started investing in distressed 1 to 4 unit properties out of state. So in Jacksonville, Florida, and also in northern Indiana, and learned a lot from it. My partner being in the construction industry, we decided to focus on that heavily distressed properties. So he was acting as either the GC from afar, the general contractor, or managing a GC for these projects. And it worked out well, but eventually we got to the point where we had a lot of people that we would share this with who were interested in getting involved as passive investors. So we felt that it made more sense from an economy of scale standpoint for ourselves and also for them to go bigger and go into larger multifamily real estate, larger than 1 to 4 units. So now we're looking more in the 20 to 100 unit range. And we did a deal, for example, like last year in Oklahoma. That was a 72 unit property. And that one, still the same strategy of heavy value add, anything with a heavy construction component to it. But larger numbers of units, bigger numbers when we underwrite, that kind of thing. So now we're just in that space, and it's been really awesome, and we're just continuing to grow.
Love it. So, and the house hacking is a place where a lot of people, I think, find their start in real estate. I think talk about it on the Bigger Pockets podcast. Like it's a great spot to kind of get your feet wet and like realize the power of real estate, right? And
Yeah.
even, saying, you had this house hack and you were living in kind of the small part of it, right? Like,
Yep.
so there's some level of sacrifice involved in the beginning, and being willing to give up some of those maybe creature comforts so that you can set your vision in motion, I guess, and then kind of gradually move on from there. But that progression of house hack to maybe smaller residential multi, and then into sort of the larger commercial rent multi is often the path that people take. What did I know you said your partner's in construction. Did you have mentors? How did you learn this? What inspired you to to make that progression? I think like it's funny, 'cause, I mean, I house hacked when I was younger, but it wasn't called that. Like, I had roommates in the
Right.
house, so it was just like I couldn't afford the mortgage on my own. I got roommates. Like, it's like I didn't intentionally do that, but then taking that's an easy thing to fall into, but falling into like a 72 unit is not an easy thing to do. So how did that progression work for you? What was like the strategy along the way?
Yeah, I mean, so originally what got us even into it in the first place was actually I have since I was like in 8th grade, I've always wanted to be a business owner, an investor, an entrepreneur. I read it wasn't Rich Dad Poor Dad by Robert Kiyosaki. It was actually like some random book that came with his cash flow game at the time.
Oh,
But I
okay.
happened to read it on like a spring break because that was the only book that I hadn't read on the shelf. And and it totally changed my entire life. And I was like, oh, this is what I want to do. I don't want to, be an employee. I want to be on the other side of that, the BI triangle, for those of you who have read it. And so I started kind of doing little businesses and, investing in the stock market and that kind of stuff while I was in high school. So I already knew that I was going to invest, and I wanted to invest in real estate once I got to that point, that I guess could. And then my partner, his name is Brody. So we're actually partners in business and in life. And he wanted to buy a house. So, and by then we were, adults. We were like 20, I think. But we were like, all right, let's go, like
Just barely adults. Yeah.
we were just there.
Yeah.
And he was like, I want to buy a house. And so I was like, well, if we're going to buy a house, I'm not buying it unless it's an investment. So we decided to do a house hack so that it would be an investment and we'd have a house. So we'd get best of both worlds. So that's kind of how it got to that point. And then the progression, I guess, from there was just continuing to grow. We didn't just like go out being like, we want to buy a house and then just like buy a house the next day. We actually spent a couple of years like learning about real estate investing, listening to Bigger Pockets. At the time, I think I had some kind of like driving job or something. So I was driving a lot, and I would just listen like all day to Bigger Pockets and like take notes and don't do that while you're driving, but I have
PSA.
a big notebook of notes.
Yeah.
Yeah, and so that got us to that first house hack, and from there it was just continuing to learn, continuing to grow, and then just wanting to continue to go bigger, and to we had the vision of bringing in that passive income and living life on our terms. That's like pretty much why we do what we do, and why we bring in investors, and like why we want to help them is we want to help them also do that. So for us, it's just continuing to grow that in that direction, and like help ourselves and help our investors and basically everyone in the process to get to that goal.
Yeah. You said that your focus is heavily distressed, heavy value add type of assets, right? And How are you sourcing them? Because if you're in Bay Area, and now you're talking about Jacksonville, and did you say Ohio was another one?
Indiana, and then
Indiana, and then Oklahoma.
yeah.
How are you sourcing your deals?
So that's a good question. um, we focused a lot in the beginning, especially on relationships. So relationships with at the time 1 to 4 units, agents mostly. Now it's more brokers. So building strong relationships with them. We have a couple really good ones. And they tend to have different deals that come up here and there. And then also, we actually found quite a few of our deals just on the MLS, even though it was like the market has been high the last 5 or plus years, and continuing to go up until recently, right? But I found quite a few on the MLS, and we just put in an offer and got it at the numbers we needed it at. So there's still deals out there, even just right there in online. So that, and then with the larger deals, we've actually had built relationships with other syndicators that have been doing this for like years and years. We felt that was the, I guess, least risky way to go about it for our investors, because we didn't want to just go out and do like some gigantic deal and be like, yeah, well, we've never done this before, but why don't you just put all your money in here? So partnering with experience is something that we like to do. So we look for our own deals as well with those different strategies, and having relationships with people who also have off-market deals. But we also, like, for example, the Oklahoma deal we did, that was with another more experienced team. And we just had built the relationship, and they actually brought the deal to us and said, hey, do you want to jump on this? Like Brody has the asset management side, you have the investor side. And so let's collaborate, basically.
Yeah. And it's, I mean, so many important things that you just kind of said them like they were nothing, but like it really important points, I think, for people, especially that might be early on in their process, is the relationship building, just trying to make as many connections as you can. And it's like, what you're realizing is with those relationships and connections and the network, like, you don't have to, house hack is obviously going to be local because you're going to live in it, but like that doesn't mean that you have to stay only in the market that you live in. You can, that's not a bad strategy, but like there are other ways to do it. And so if you're going to be investing from California in Florida, Texas, Oklahoma, Indiana, Georgia, that's where I like, you've got to have relationships around that, and people to talk to about, kind of specific markets or specific skill sets or whatever the case may be. It's about finding partnerships. Another thing that you mentioned is finding these smaller properties up to 4 units, and even bigger than 4 units you can find on the MLS sometimes. Like there are definitely, I see it all the time for, like, in LA, I see listings all the time for 6, 8, sometimes even bigger multifamily properties here, and those are technically commercial properties. They have a different set of lending rules and things like that, and so you can find them, and sometimes they're deals because, quite frankly, maybe the realtor who listed them doesn't actually necessarily understand commercial real estate, and so it may be not valued in the same way that, or they're valuing it the way that they would value a residential property versus the way that we typically value commercial properties, which is comps versus NOI or essentially profit generated by that property. So I just like kind of the way that you walked through that. There are a lot of important points and like things that people can take as tips to do just what you're doing, right? To kind of follow your path if they want to. and looking at it from a how do we grow standpoint. I think that those are really truly like the steps that you outlined.
Yeah. For us, it was kind of a natural progression. And we just kind of ended up here. We didn't start out with the house hack being like, we're going to be, we're going to have 80 units in our portfolio by this time. And it was more like we liked it and we wanted to do more of it. And then it became, what it is now. So yeah, it's very doable, I think, by really anyone who wants to go out there and put the work in.
Right. And that's it. It's putting the work in. It's not easy, especially as you start to grow your portfolio. You've got to put, systems and people in place to kind of have a good management system of whatever those, whether it's management of the finances, management of the individual properties, whatever that case may be. So that that putting those pieces in place as you grow, I think is really important.
Yeah.
So you're focused on investor relations. So how do you find new investors? Like what strategies are you using to expand your investor database?
Yeah, that's a great question. That's where this is where I love to be, is in the investor relations side. I come from a sales and marketing background. So I love being in this position. So I do a couple different things because I came from a strong sales background, especially that has been really helpful with taking those skills and translating them over to what I do now. So I do a lot of different things. One is I love people and going out and being in person and meeting people that way. I think the relationships are much stronger, much, I guess, faster in a way, but it's not as scalable if you're, you can only be in one place at a time. So I love to go out and network and just go out and meet different people, wherever the investors might be, or just active or passive. So networking is definitely one that I've enjoyed, and it's one of my strong suits, is just like being around people and talking to them, and especially in person. That's one of my favorites. So I tend to feel that that's like where I do really well. And I say that because I think that these are my strategies that work really well for me, but you have to like look at your own strengths and be like, what am I best at? What are my superpowers? And then like go in on those. So for me, talking to people, from there, usually from networking, I tend to meet different investors, and then I just follow up with them afterwards. And we do like a one-on-one, either on Zoom or in person or whatever. And then we just keep in touch from there. And, deals or investments or whatever else end up coming out of that, just from, meeting new people, making new friends, pretty much. So that's pretty awesome. I love that one. Another one is LinkedIn. So I'll share like information about passive investing and different things that passive investors really need to know in order to make smart and good investments. So I try to share information that's really helpful, mainly on LinkedIn. And then also I interact with others on LinkedIn. And if I see anyone who I find interesting, I just reach out to them like, hey, want to set up a time to chat. So kind of just reaching out to people that are in the space and connecting. And so a lot of it is that kind of stuff. I have, an email list where I share tips and different information, for passive investing, and more about what we're up to with our deals that we have going on, stuff like that. So I like to keep in touch that way as well. So yeah, those have been the main things. I go on podcasts, share what we do, and then people reach out. So those have been the main ways I've tried to just kind of stick to like just a few.
Yeah.
Because there are so many ways. And when I was getting started and like really doing more of like sharing who we are, and it went from ourselves doing our own deals to like, hey, now we can bring investors in as well.
Yeah.
It was like, oh well, there's so many options, what do I even do? And I wanted to do them all, but you build it up over time.
Yeah.
So I like to
Yeah.
just focus on the ones I do best, and I think that others, if you're trying to figure out what to do next with getting your name out there, start with what you like doing best and what you are good at.
Yeah. Yeah. I think, something you said is a really important point to make. I mean, there's a lot of emphasis out there on the ability to maybe market and reach investors through social media, because it's at scale, essentially, right? You can
Mhm.
put something out there, and again, and it's true. I mean, it's a value. Certainly, you need to have. It's really hard to have a business at this time in and not have a social media presence at all. But at the end of the day, when we're talking about syndication, like it's a large investment. It's a large
Yeah,
investment from these people, and they're very likely going to want to know you better than just having seen that you have posted some things on social media and like
right.
LinkedIn or whatever. Like there, and so you know having these go to networking and then following up with people and having these one-on-one conversations, I think is incredibly important, especially to building like the long-term relationship. Because the reality is, you don't, I mean, not that you don't want someone to invest in one of your deals, but what you really want is to people like find that trust in you and continue to invest in your deals over time. And so
Yes.
it
Mhm.
really is a relationship. You're making friends with them. Like there's a lot to it that goes into it. And so instead of looking at it as almost like a transaction, you do want to look at it as that sort of relational type of interaction. So I think
Absolutely.
the way that you described it is really great. It's a way to go about it, and it's the approach of we're just taking it as it comes, kind of. It's a very good way, I think, to form investor relationships, because it's not rushed, it's not pressured, it's like, hey, let's just let's just know each other,
Mhm.
and I'll tell you about the things that I'm doing when we have an opportunity. If you're interested, you're interested, and that way you already kind of have that in place. So I think the way you're approaching it is very smart, and it really, I think, sets you up for long-term success.
Yeah, that's absolutely the goal. We don't, as much as we obviously want to have each investment like filled with investors right away, it's more about the long-term relationship, really. And it's more fun when when you really know your investors and you
Right.
know them in person, and
Yep.
it's just way more fun too.
Yeah. Yeah,
So
absolutely.
it works out both ways.
It's, yeah, for sure. I mean, I think it's a comfort level. People talk all about know, like, and trust, and it's like, if you're able to have like relationship and fun and friendship with your investors, like then you've got all three right there. That's, at that point, you've moved into that level, and that's what you need to be successful in a syndication space.
Yeah.
um it's the time frame, I think, that we talked a little bit about here, just about sort of not rushing and not pushing deals and things like that. The time frame, I think, is key, to have that relaxed attitude,
Yeah.
especially in times like now, where deal flow is not as high as it was 2 years ago, and there's going to be shifting markets and things like that. And so I think having that ability to just kind of uh, go with the flow, and move along with your investors through the market cycles, I think is incredibly important too.
Yeah, absolutely. And I think it's also nice because you can, at least for us, like I like to share like a monthly economic update where I share like, here's what's going on in the market, and like, yeah, things are kind of high right now, or things are kind of low, and then people can see like, oh, okay, if it's higher, I see that now that the deal flow is maybe less, or it's just another way for them to be able to learn and to grow their own knowledge and be able to make better investment decisions for themselves too.
Yeah, absolutely, 100%. Alex, I want to switch gears here and ask you the questions I ask every guest. And the first one
Great.
is, of course, based on the name of the show, but I always like to ask everybody, what is your why? What's driving you to grow your business towards bigger success?
So it's funny because your podcast description is very similar to my why. So I love real estate, but like the deeper reason is really that I want to live my best life, and I want the people that we work with to also be able to live their best lives. So become their best self, the best version of themselves, and really live the life that they want, and be in control of those decisions, be able to not be limited by their financial situation, or a limiting mindset, or things like that. I really think that if we all were able to strive for the best version of ourselves, and like living the best life that we can, that this world would be a better place. I think it's wonderful. This world is already wonderful, but I think it could be even, I think it would be even more amazing. So, and I think people would be a lot happier if they strove for that. And, I think people forget, like we forget, like we're going to die eventually. Like we have this one life. So, that's why I do it. I really love helping people, I guess, on that journey.
Yeah, I think it's it's once you're in it, it's maybe I feel like once you get in it and you're realizing that it's possible, right? You're realizing that you can actually construct how you want your life to look, and sort of live that best version of it. Then once you get in there, you're like, oh, I need to tell everybody. I need to tell everybody, and I need to help everybody also do that for themselves. And it's like, it's just, it's empowering and exciting, and also sometimes frustrating when you feel like you can't get that message across. I think like there's just like all these things that go along with it, but just once you realize what the possibilities are, it's kind of like, oh man, like how deep does this go? How far, how wide can we spread this information? Yeah. It's no, I totally get it. It's just like it gets so exciting. You're like, look, this is what we can do. Like, really, this is what you first think people, oh, maybe it's too good to be true. And it's like, it's not easy.
No.
Like and that's like it's not easy at all. But like at the end of the day, like the ultimate goal is essentially life freedom. So I think it's great. And you're right. Eventually it's going to end for all of us. And so you might as well have the best version of it as you can in the meantime.
Yeah, absolutely. And I think, it's not necessarily easy, but I don't know if, the other, I guess, ways of living, I guess, if you will, are necessarily easy either. So I think we choose our hard.
Yeah. Agreed. Yeah, it's not, there's really no easy in life. It's just kind of, you got to choose which version of hard you want, which is okay. It's fun. I mean, creates growth, and challenges created, growth is created in challenge. So I think it's a very great way to sort of look at it, look at life that way. When people hear this and they want to reach out to you, what's the best way, Alex?
I would say either our website or LinkedIn. So our website is investwithkgi.com, kgi.com. And my LinkedIn is just my name, Alex Kingman, or you could look up our company, KGI Capital, and just reach out to me, and we can chat more. I'd be happy to chat.
Okay. We'll put that in the show notes. Tell us something about yourself that isn't common knowledge, special skill, a hobby, anything that you're comfortable sharing. Let the listeners know you a little better.
Sure. Let's see. I'm a mom, so I have 2 daughters. So that's fun. I love being a mom. Really, like, I feel like my life is like business and real estate, and then like family and kids, and that's like pretty much all I do. And I love it. And I guess also I love doing like creative things as well, like writing music, writing songs, singing and songwriting. So that, or being outside, going on hikes, camping, nature. Yeah.
Amazing. Sounds like a pretty well constructed life. I like it. Final question for you, Alex. What piece of advice would you give to someone who wants to get started? They're hearing this, they're kind of inspired by your journey. What would you tell them to get them going?
Well, let's see. To get started, for me, at least, whenever I want to get started in something, I just try to just do it. Like, whatever is like the first step, I try to just like go do it, even if it's like really bad, or like I just don't worry about it. I'm just gonna go do it, and then I just go do it, and then I adjust after that. So I'd say for people who are just getting started, whatever that first step is, like, just break it down and then take that first step. Like, don't think about it, don't overthink it, because I know some people, it's kind of sad, like they've been thinking about it for like years and years and years, and they just never take the step. Like, they know so much because they're in that like learning analysis paralysis, and they never get there. And that's, it's like, well, why learn all of this if you never use it? So action is important. So that, and then don't stop if it's something that you want. Like, if you have a strong why for it, don't give up, even if it feels like you're failing. A lot of times it's going to feel like you're failing. It just will. Like, you're growing, you're going to make mistakes, you learn from them. But if you just keep going, you'll find a way to get through it, and it'll be fine. So not giving up, it sounds like such a like, oh, just don't give up, but it's a lot of the very, very successful people that I know, who have been mentors to me in the past, etc. They just didn't give up. They told me, like, yeah, there were times where like I almost went bankrupt twice, and I just like figured it out. I just didn't stop. So just keep going once you start.
Yeah, so true. Take action and don't quit. Right? Like, that's it. That is success right there. Right? That's the secret to success.
Very simple, not necessarily easy all the time.
Exactly. Right. Yeah. It's easy to stay, or yes, simple concept, but difficult to execute. And it's, I mean, I guess the whole reason behind this podcast, sort of being what it is, being called what it is for those hard times. Like, it's for that, like it's those, that's what gets you, like, having a strong why is what gets you to take action. It's what gets you to not quit when things, kind of punch you in the face. It's like, that is just ultimately, if you don't quit, then it's not over. Like, you can get through. Like, just keep going. And it applies to so many things in life. And I think that's a great, sort of message to put out there as your advice, to take action and don't give up. It's just, and it, again, sounds, simple but not easy, but it is truly the recipe for success.
Yep, agreed.
So cool, Alex. Thank you so much for coming on the show. Really appreciate you taking the time, sharing your story. I'm sure people are going to love this. I think your perspective and attitude towards all of this, I think, is actually very refreshing and genuine. So thank you for being on the show.
Thank you for having me. I really enjoyed our conversation as well.
Folks listening, I know you're going to love this episode. Make sure you find Alex on LinkedIn, or we'll have everything in the show notes. And please like, rate, and review the show so we can get more great guests like Alex. And thank you all for listening.
Hey there, I am Dr. Jason Ballara, and this is the Know Your Why podcast, where we explore the why behind success. Every week, I meet with real estate investors, veterinary entrepreneurs, mindset coaches, authors, and fitness professionals to uncover their why and how it drives them on the winding road to success. What is your why?